this out of the way. And so we definitely had a short-term bottom around $18. Silver apparently was oversold down there, likely gold as well. But this ramp up in silver, and of course I have been predicting lower prices, and I still do. But this ramp up in silver coincided with the Fed's coy uh, pivot to dovishness, where he said we are at neutral and I'll do what the data shows me in the future. Well, that was enough to rocket silver and gold prices higher, as well as the stock market. I think both are related to the wish on investors' parts that the Fed is done hiking, and there may even be a pivot in the future. Of course, then the labor market report came along yesterday and crushed that thought, because labor is still stronger than people would like to see if there is to be a Fed pivot. I think this is all noise here in the middle of the move. I think that we are in for a long, kind of a boring period where prices ratchet lower. I think that will happen in silver. Gold has looked stronger. I will say, gold, got to give gold its due. It really is looking better than silver. Silver, this bounce when it hit resistance, it turned over that labor report. I don't think we've seen the full repercussions of that strong labor report yet, so I'm expecting lower prices. But it could be that we ratchet lower, and I could be wrong, could go higher, but it could be that we ratchet lower for a period of time as the market bleeds off and as we approach those old lows and go lower. So I'm still holding with my prediction that I think we're going to see lower prices ahead, and we'll see if that comes true or not. I think that's true of the stock market. If you've been watching commodities, you know that they rolled over and have been a train wreck for anybody that flipped from the stock market into commodities. So, this is the top coming off inflation. I'm not saying it's going to be 2% next month. It could take 2 years to come back down. But that's my prediction, is it will get down below 5 here in the next 3 quarters, maybe. Okay, so and that is that is going to depress the economy. That's going to push silver prices lower because people look at it as a commodity. I was pleased though to see when the Fed turned dovish or pseudo dovish or pretend dovish. I was very pleased to see the GSR come down off that 93 level, and what did we hit? 87, 88. There is, in my opinion, still relevance to the GSR. So keep watching that. I think we're at about 88 right now, and we could be retesting that 93 level. But I do think people generally acknowledge that silver is cheap compared to gold. So that's where we are, predicting lower prices, long-term sell-off, bleed off as the economy gets worse and inflation tops out here. Of course, every year, if things are 5, 6% more expensive, that is a destruction to your wallet. And, metals will ultimately rebound and recapture that inflation. Metals will go to the upside to recapture that inflation, but it happens in fits and starts, and you just want to watch. And in my opinion, wait. But that does not mean that everybody should wait. I try to explain this in every video. My videos come from the perspective of somebody who's been doing this for about a decade, who already has a stack. All right, I already have a big stack. I don't need to buy $25 buffaloes to make my stack any better. $25 buffaloes won't make my stack any better. $32 eagles won't make my stack any better. If you're just getting into this, however, then there's a lot of merit to dollar cost averaging, because cheaper in the long term. I'm not sure how I get a long term chart here, but silver is a bargain. Okay, I don't doubt that it's a bargain, and it may be 25% away from whatever low it will print eventually, but it could be, it certainly could be a double ultimately. So, we're closer to the bottom than what I perceive as the top, and there's every reason in the world to dollar cost average if you're building your stack. But if you got a big stack, you're waiting to buy the dips. What I want to go through now are the 10 questions that will help you identify what you should be stacking, when you should be stacking, and what you should be stacking and how for your particular life circumstances. Let's get on to that. All right, let's go. These are stacking questions that will, I think, help any stacker, new, intermediate, or mature, especially if you haven't considered these. I tried to think a little outside the box here, but these are the questions that may help you to pinpoint what you should be doing. All right, let's get going. The first one is, are you going to resell retail? All right. Now, as I've said before, I have an eBay store. Many of you do. It's getting harder and harder to maintain those stores with fees and tax reporting and whatnot. But you really would need to be honest with yourself. Are you going to resell retail? Reselling wholesale if you're going to do that at the LCS or on Instagram, which is harder than you think, you are going to need to you're going to take a big price cut. Okay, so and this will determine what you should buy. So you have to be honest with yourself. Are you the person who's going to set up an eBay store, a PayPal account, get a business license, file, Schedule C? That's all necessary if you're going to do multi-thousand-dollar sales on retail. And of course, everything we buy ultimately turns into multi-thousands. So don't think this is a $30, dragon coin or something. This is, if you're going to do it, are you going to do it big? If the answer to that is no, then you should be avoiding collector coins. If the answer to that is no, I'm just going to resell to the LCS, then you should be avoiding all the hot new coins, all the US Mint products, all of anything with a higher premium, and probably even Silver Eagles, because you take a pretty decent haircut if you sell that at the LCS. So that's number one. Are you going to sell retail, or are you just going to sell to the LCS and buy accordingly? Number two, what state do you live in? All right, states have different rules. Of course, this pertains to their sales tax rules. Of course, in some states you have to buy a certain amount, spend a certain amount to avoid sales tax. Never ever pay sales tax. If you're paying sales tax, this is the same advice I have, generally for fractional gold and silver. You don't want to pay that extra premium. You want to avoid sales tax. So when you save up your money, make your purchases, don't pay that sales tax. Beyond that, the state will determine the difference between bullion and coins. Now, some places actually use pawn shop rules. I'm probably oversimplifying, but if you walk in there with bullion, they're going to put a hold on it for 30 days. They're going to give you a below spot price. There's potentially going to be tax reporting. In many cases, coins are free from all that regulation. So depending on your state, and if you plan to sell in your state, you may want to gravitate to bullion or coins. In my state, I can sell, I think up to $10,000 of bullion to the LCS. There's not going to be any reporting or a 1099. In your state, that may be different. But recognize that bullion is going to go for $2 over spot, and coins are going to go for $4 plus over spot. And some of the cheaper sovereign coins, like the kangaroos, and it used to be the maples and some of the Britannias, they could spot on you. All right. So, and if they spot, you're not going to get that premium when you sell them back. They have to be retail ready, and certainly not handled, and generally not tarnished. So coins need to be pristine when you sell them back to the LCS. Bullion is a lot more forgiving, but it also should be kept retail friendly. But check your state rules. Talk to your LCS about the difference between bullion and coins and what they buy and what the rules are when they buy them. This pertains to gold as well. Of course, there's taxation on some gold, and there is no taxation on other gold coins, such as American Gold Eagles. But the premiums in that case are enormous. So what I wish for you is that you would live in a state where you don't have these onerous rules and tax consequences to buying bullion, because I do want you to pay the lowest premium over spot, but I also want you to be able to liquidate it when you can. Number 3, your age. Okay, if you're Alice Walton and you're, pushing 75 and you're speculating on silver, recognize that I was making videos back in 2014 talking about the big move in silver, right? And I was part of that, crew, and I believed in it. And we had a move to $20, right? And I thought that was the big move. Just like when we recently moved to $30, I thought that was the big move, the silver squeeze, the ill-fated, stupid silver squeeze. But recognize that your silver can outlive you, and you may not make it to that bull run. I do think there will be a bull run someday. I do think we'll hit $50. I don't know if we'll ever hit $5,000. But if you're 75 years old and you're buying silver, I think you're making a mistake. Okay? Gold. All right, the end game, I think, is gold, and I think that is what older people should be investing in. It's very liquid, again, depending on the tax rules and so forth and how you plan on selling it. So the older you get, just like stocks and bonds, the older you get, I think your ratio should shift to gold, and that is why I plan on trading out my silver, half, I don't know what the number is, my silver for gold when that GSR starts cooperating. Right now, it's making us GSR traders look like idiots. And so be it. That's where we are right now. We're headed into recession. Nobody wants silver in a recession, guys. All right, number 4, risk tolerance. This kind of goes with the age thing, but you could be middle age and have a low risk tolerance or a high risk tolerance. I'd like you to recognize that silver is the riskier metal. You stand to lose more, and you stand to make more. And what risk tolerance typically determines is what happens when you've lost a bunch of money. Are you a seller? Right? Are you a seller when you lose a bunch of money, like a lot of silver stackers are? The videos come up all the time. I'm done with silver, sold it all at a loss. I bought Bitcoin, etc., etc. Did I spell tolerance right? That looks wrong. Let's see. That looks like maybe that should be an E. Okay, well, pardon my spelling. So recognize what do you do when things go against you. If you've had a stock market, a stock investment, and it's gone against you, have you sold it at the low? Did you hang on forever? Metals favor those that hang on. Once you got your physical stack, right? Hanging on is the name of the game in silver and gold, in my opinion. That's why I do that. But I do trade around and I add and subtract when we are at extremes. Pardon the slurp. Okay, dips versus dollar cost averaging. All right, a lot of people say dollar cost average, and that is the tried and true methodology for stacking. I'm going to talk about silver mostly, and that works well. Of course, when you dollar cost average and silver is on a run up, you're paying more. When premiums are up, you're paying more. Dollar cost averaging is kind of the set it and forget it mode of investing. Again, if you don't follow the silver and gold markets closely, if you don't understand kind of why it goes up and why it goes down, and even those that do understand it get it wrong sometime. Dollar cost averaging may be the way for you, especially if you're getting started. I personally believe in watching for the dips and would make more aggressive purchases when we have dips. Are we having a dip right now with silver begging for 20? No, no, I don't think so. I also believe in selling the rips. And I don't do this as much with my physical stack, but the next time we're pushing silver, we're pushing 30, I'm going to be thinking of selling more rather than wishing for 40. Right? That was the mistake I made in the last silver squeeze, was not selling. So there you go. You can do that or not. If you're a buy and hold kind of guy, you can be a dollar cost average kind of guy. But I like getting the best deal. When you dollar cost average and you're not paying attention to premiums and so forth, you can wind up paying 20% more for the same silver I will buy 3 weeks later. If you want to be, again, set it and forget it, you can take that haircut. That works for a lot of people. I'm not going to knock it, but recognize I'm coming from a mature stacker's point of view when I make my videos. All right, safety net. Do you have it in place? Do you have your 6 months of expenses stashed in cash somewhere, or are you spending your first and last $20 on a piece of silver? You got to be backed up. You got to be able to pay the mortgage. You got to be able to feed your kids. Don't ignore the safety net, even though it seems exciting and compelling that now is the time to buy. I guarantee you there have been a dozen such times over the last decade where it was exciting and compelling, and you would find all the videos telling you to do so, and even buy collector coins. I've made those videos, but again, not if you're not going to sell retail. So have your safety net, and don't be the person that sells out at the bottom because you need a new set of tires on the car, okay? And I do not believe necessarily in stacking silver and gold for expected events like that. Like, I know, if you get cancer or something, you got to pay medical bills. Yeah, absolutely sell your stack. You should be able to predict that you need a new set of tires on your car. If you're stacking at that level, I would suggest you build cash rather than build silver and gold as a savings mechanism. Some people say that it helps them to stay disciplined. They don't mind taking the haircut when they need that new set of tires. I don't roll like that, so that you'll have to decide if the control that metals puts on your spending habits is worth taking the haircut when you sell for that new set of tires. And you will take a haircut, especially even if prices stay the same. Number 7, portability. All right. Well, I don't know how Alice is going to handle all those silver eagles, if she's going to dump them in the swimming pool, or, drive them off a cliff, or, pay somebody to hold them for her. But gold is really portable. Gold is, like I said, I think gold is the end game for many people. But if you buy too much silver, then you're going to have big boxes to move around every time you move. When you try to hide it, or bury it, or whatever you do with it, a lot of silver is heavy and awkward and hard to hide, and it won't fit in your safe. So keep that in mind. This is, when you kind of get into the 5,000 ounces club, which I'm sure many people wish they were in. I will tell you, it is a chunk of silver, and if you move as much as I have over the last few years, you will come to appreciate how heavy it is. It can also burn, like your house can catch on fire and you have to run, etc. You can always grab gold. That's why I want gold, and in the end, I want to have more gold than silver. Conversion. All right, I talk about the GSR a lot. This is what I'm talking about. If you want to play the GSR, you'll be trading your gold for silver or silver for gold. When we hit extremes, I I believe in it. If you're going to be a GSR trader, you have to be in the low premium items. You cannot be in silver eagles or gold eagles or collector coins, etc. Low premium silver, low premium gold. The haircut will be lower and the conversion will be more profitable. Also, when you buy, you have to obviously you have to buy the low premium stuff. Are you a GSR trader? Is that something you want to do? You could literally double the size of your stack by trading the GSR. But you have to curb your emotions, right? When silver got up to 29 and change, GSR dropped to, was it 40, 50? I don't actually recall what the GSR was. That was screaming at everybody, trade out your silver, trade it out for gold, right? And even now, if the GSR goes to 93, it's still screaming, even though both prices might be depressed, it's still screaming, in this case, trade your gold for silver. Can you do that? Well, that takes iron will, and you have to curb your emotions. So if you're going to be a GSR trader, you might just want to turn off YouTube, because we will all be doing the exact opposite of what you're doing. Number 9, taxes. I talked about this. But I think this goes beyond, some people have said old Alice, may have bought the silver eagles because she doesn't want to pay income tax. I don't know if billionaires pay income tax anymore. Apparently they kill people and, they get fines and, they get out of jail with no problem at all if you're a billionaire. Do you have to pay taxes? Well, in that case, sovereign coins, American silver eagles, if you're the kind of person that is going to report your gains, then you may want to only buy those coins that do not require you to pay income tax, capital gains tax, etc. Actually, I'm not sure offhand if metals are taxed at the ordinary income rate or at a capital gains rate. Seems to me it might be at the ordinary rate, but please post that below if you know that offhand. If you're the kind of person that's going to take, your bullion to the LCS in small chunks and grab the cash and never report it on your taxes, then you don't need the sovereign coins. So decide what you're going to do. Think about your liquidation plan. It is really important. Okay, finally, personality. This has to do with buying and selling, and whether you'll sell at the bottom or you'll buy at the bottom. All right, so I've already touched on this, but know yourself, know what you've done before. If you've been divorced 4 times, if you have a bankruptcy in your history, if you have an erratic history of earning income, booms and busts, etc., this may not be for you. This is for steady Eddie individuals that can weather the storm. So are you that person? Can you wait another 10 years? And I don't think it'll be that, but it could be 2. We could be in a long, drawn-out, slow water torture recession where everything grinds lower. So before you make that first purchase or that 100th purchase, just think about the time frame. Nothing is guaranteed as imminent. The dollar could be hanging on for years and years and years. The Fed could play their games for years and years and years. Yes, a loaf of bread may cost $20 one day, and I think mining costs, will keep metals at least at reasonable levels in the long run. But it could be a long slog. So that's not the exciting kind of video everybody wants to hear. This is why I don't get thousands of views on my videos. But that is my advice to you. Go play in some other pool, right? If you've got that kind of personality that you're playing for the home runs. Silver is not a home run game. Silver is a slow and steady and watch for opportunities game. You want to do something else, then pick a different asset to speculate in. All right, that is my video for the week. A lot to think about here. I hope you got some value out of it, and I'd love to hear your comments on everything we've talked about. I don't know what you guys are doing out there, but right now, powder dry, lots of cash for the stock market, lots of cash available for metals, looking for opportunities, looking for lower premiums. This billionaire story is pushing up premiums again. The U.S. Mint unconscionably is curtailing production or ceasing production. I'm not going to play that game. I mean, I'm not anywhere near playing that game. I'm waiting for the bottom to drop out again, for the premiums to drop out again. And it might be a long wait, might be a slow wait. I don't know, but they're not getting my money on $32 Eagles, that's for sure. Okay, guys, I'll talk at you later. You all have a great weekend. Louis out.